The next heading is Indian Capital Market Evolution and Growth. So, the period between 1947 and 1973 marked the development of infrastructure for a capital market. So, between 1947 and the 1973 marked as the infrastructure of a capital market. During this period, a network of development financial institutions such as IFCI, ICICI, IDBI, and UTI, SFCs, and SITCS were established. So, these financial institutions strengthened the capital market. During the period between 1980 and 1982, debentures emerged as a powerful instrument of resource mobilization in the primary market. So, during the period between 1980 and 1982, debentures emerged. The public sector bonds were introduced. A number of stock exchange came into existence. There was a momentous growth of secondary market. Then SEBI emerged as an effective regulatory body for the primary and secondary market and offered a measure of protection to small investors. New financial services such as credit rating was introduced. A number of committees were constituted in order to suggest measures to revamp and restructure the working of the secondary market. Some of these committees were Committee on Organization and Management of Stock Exchange, Working Group on the Development of Capital Market, a study group for guidelines relating to valuation and new instrument, etc. The new financial institutions, a number of institutions of finance have been established to cater to the credit requirement of various segments of industry and needs. A brief outline of these institutions is presented below. First one, venture fund institutions. Venture capital financing is a form of equity financing designed especially for funding new and innovative projects. So, venture capital funds bring into force the high technology projects which are converted into commercial productions. Then, mutual funds, financial institutions that provide facilities for channeling savings of small investors into avenue of productive investment are called mutual funds. Then factoring institution. The factoring institutions collect the book debt for and on behalf of its clients. So debtor, factors and company. Over the counter exchange of India, it's a 2 mark question. The OTCEI, over the counter exchange of India, was set up by a premier financial institution to allow the trading of securities across the electronic counters throughout the country. The National Stock Exchange of India Limited. The exchange aims at providing the advantage of nationwide electronic screen based on scribbles and floorless trading system and securities. The National Clearance and Depository System NCDS, National Clearance and Depository System. National Depository System which arranges to provide for the transfer of ownership of securities in exchange and payment of book entry on electronic ledgers. The National Securities Depositories Limited. The NSDL was set up in the year 1996 for achieving the time-bound dematerialization as well as rematerialization of shares. Then Stock Holding Corporation of India Limited. Stock Holding Corporation of SHCIL. Stock Holding Corporation of India Limited aims at serving as a central securities depository in respect of transaction on stock exchange. Then foreign exchange market. It is the largest, most liquid market in the world with an average traded value of more than $5 trillion per day. It includes all of the currencies in the world and any individual company or country can participate in it. Then commodity market. Hard commodities are raw material typically mined such as gold, oil, rubber, iron and ore. Soft commodities are typically grown in agriculture primary product such as wheat, cotton, coffee and sugar. So it may be asked in the one more question also, hard commodities, cold, oil, rubber, iron and ore. Soft commodities, cotton, coffee, so agriculture product. Then derivatives market. Derivative market facilitate the trading in financial instruments such as futures, contract and options used to help control financial risk. So derivative market, the instrument derive their value mostly from the value of underlying assets that can come to many forms: stock, bond, commodities, currencies and mortgages. That's all children. So fifth lesson finished, very less lesson, very small lesson. I'll give the question answer PDF, write it in your classwork, pause the video, read and send the answers to me. Thank you children. I'll see you soon with my next video.